I absolutely love this business. I would recommend it to all of you. It's changed a lot in the 39 years I've been in this. When John and I first started, the commission rate was $100 a contract. Today it's 25 cents at Interactive Brokers. And so the business is going to morph, I think, dramatically going forward. And if you think about trading, it's no longer the cost of trading anymore. It's just about getting the markets right. And if you think about Las Vegas or anything else, you really have three choices in the markets as a young trader coming in at what you have to do. And by the way, we hire summer interns. So if any of you are looking for an internship, let me know. We start in October. We go through a little bit of an interview process, but we love having summer interns. I have an office in Brazil, Guyana. We have an office in Geneva, Switzerland, and our main office is here in Chicago. So there's a little bit of opportunity if you like to have a little international flavor. In saying that, when you're in the trade or you're in a business, I tell everybody, at research firm, we try to help everybody make good decisions or better decisions. But there's only really three choices: up, down, and sideways. Do you want to buy, do you want to sell, or do you want to stay out? And so doing our fundamental analysis, or what we call economic analysis, maybe helps that get going. Now, the world of trading has become very technical and system-based in the last 5 or 7 years. However, in the last several years, I'm seeing a shift back now to more of what I do, which is, I had a fund called, in fact, on Friday, said, you know what, if you're going to sell me a trading system, if you're going to sell me technical analysis, if you're going to sell me data, I don't want to talk to you. And I said, no, I won't do any of that. I really am a guy who's based in agriculture. We have a climate scientist on staff. We've got the director of our research as a USDA chief economist. We try to do things that give you vision. And he said, you're hired. And so I'm seeing the shift back now a little more to fundamentally focused. And being this course in Wisconsin, I'd like to talk a little bit of just, for those of you that aren't economics students, it's all about price discovery. The Board of Trade is really a price discovery mechanism, or the CME. We all like to think of traders making money, but at the end of the day, we're determining the price of corn, soybeans, wheat, hogs, cattle, or T-bonds, or any other commodity for someone who's actually using that in the cash market. And so all of our research is really stepped in cash analysis and basis. And we start in a big picture. At AgResource, we'll start talking about caloric intake per person. What does the average American, or you are in blue here, the industrialized nations, how many calories do you eat every day? In this case, it's 3,400 calories that the average American eats, and everybody wants to eat like an American. Now, your doctor would tell you maybe 3,400 calories is 700 to 800 too many, but in the end of the sense, whether you're the light blue line, which is China, look how China has advanced in terms of caloric intake just in the last few years. They've made a lot of progress. And as we think about the next, as I think about it, 2030, when you'll all be in the middle of your productive careers, it's really South Asia, India, that is the next driving factor for the commodity world in agriculture. We also know that when we talk about up, down, and sideways in my field, the hardest thing I have in doing analysis is something I call political impact. We had something called biofuels, which emerged in the middle 2000 timeframe. Ethanol, biodiesel, all those kind of things. That drove a big market in commodities because of the extra consumption that was there. That was politically motivated. Then, of course, President Bush decided after Hurricane Katrina, we needed to have an alternative to different fuels. Ethanol and a guy named Tom Dorr made it happen. And so as you can see here, and you can see that feedstocks, whether it's vegetables or corn, that was a really big deal. And of course, now we have, China buying more and more soybeans. In the news in the last couple of weeks, you've heard a lot about tariffs and President Trump and trade wars and all of that. And that's based on this blue space here about China buying imports and how much the U.S. slice will be. And yes, I'm not going to spend any time on this, but we spend a lot of modeling trying to get all of these different numbers right. And at the end of the day, we really care about only one thing, which is the average price or what the stock levels will be. Are stocks of corn or soybeans or cattle or wheat going up, or are they going down? Stocks are going up, you would imagine the market would do what? Come on, there's a few economic majors out here. Go down. If you got more of something, it usually goes down. If you got less of it, it would go up. And so those are the things we really work on. It's a busy chart. I'm not going to go through each one, but then we spend a lot of time understanding the world cash markets. I'll have my staff call around the world every day trying to figure out what the price of U.S. corn or Brazilian corn or Argentinian or Black Sea barley or Black Sea feed wheat, if you look at the big one on the top, which is the market or the commodity that's been doing the best over the last 6 or 9 months, you guys drink a lot of it. It's called barley. It's what you use to make beer. And so that's been a very, very big hot market that's been going on. But again, this is all part, if you want to be a really good trader. I tell everybody, maybe it's not a bad thing to get a cash career to start with, maybe with a Cargill or a Dreyfus or an ADM. Understand the cash markets to the best of your ability. Crawl inside of them so you know what's going on and you can really have a fit of what's saying. We talked a little bit about tariffs. Our 3 gentlemen here, Mr. Trump, of course, Mr. Z, and then, of course, our gentleman from North Korea. And you can see where tariff levels have been back since 1820. When Mr. Trump put a 25% tariff level in, it was a big deal. That's why this trade war is so important. Although it's only affecting $50 billion, notice that the last time we had trade wars like this was going back to Smoot-Hawley in the 1930s. Back then, we had 20,000 commodities that were taxed or tariffed because the United States farmer was concerned about mechanization and that how that would produce too much of things and cause farm profitability to go down. So what did we do? We put tariffs on things. And so that drove, of course, into the Trade Act of 1934, which was enacted because of the Depression. We then had something called GATT, and since then, tariff levels have been relatively low. So this is a new paradigm for we in the agricultural markets and a lot of commodity markets trying to understand what tariffs will really do. And it's caused soybean farmers in my country like Brazil to just happy and be loving life. Soybean prices are $2 tonight higher in Brazil than they are in the United States. Why? Because the biggest buyer in the world has to pay a tariff on U.S. soybeans of 25%. And so these are how markets work. If you're in Brazil and you were long, you made a lot of money on the Bovespa or the Argentinian exchange, the Basse. If you were trading Chicago or the CBOT, you lost money being long, you wanted to be short. And so again, a trader's perspective on understanding markets. We also have things called weather. This is just a quick map showing you percent of normal rainfall since July 1st up until the forecast today. This is an easy fundamental for us to measure every day. We can download lots and lots of data, 2,300 weather stations around the world. You get precipitation every hour, temperatures every hour. You can model it into what it means for crop yields. This is the easy part, and best yet, we get forecasts that can go out anywhere from 2 weeks to 3 months to give us some ideas what's going to happen next. I wish we had the same kind of landscape in terms of politics, in terms of a forecast. So we at AgResource spent a lot of time trying to understand the price of corn, and we'll look at different model sets. We'll look at USDA model sets. We'll try to understand, to have vision about how to trade a commodity. So if you all want to be in the trading business or in the commodity business or in the agricultural business, having vision is what you need to be successful. In fact, we've kind of devoted our website at AgResource, and our real message is trying to help clients see the future. And so we do a lot of work. This is not easy. We do a lot of grinding. I have a lot of talent. We spend a lot of money to understand what's happening. But I do believe that if you want to be successful in this business, understanding a cash market is really key to that endeavor. Here's a really busy chart for you looking at soybean stock use ratio since 1973. What's a stock use ratio? Well, you take the amount of soybeans that's left in the United States divided by the usage. That will give you a ratio. If there's a lot of soybeans and we've got not much use, we're going to be at the higher end of that, like 36 or 34 or 30%. And you would expect what to happen in prices if you've got a lot of it relative to use? Go down. You guys are learning already. I like this. And if you have a little of it on the bottom, like we had back in 08-09 when the stock use ratio got to 3.6, prices should go up. How does that work? Well, let's look at it here. Stock use ratios were very, very low in 1973 when we had somebody called the Russians using their gold bars, buying lots and lots of grain in the world. And then, of course, just back in that lower end where I showed you in 08 and 09, we ran back up in a drought and had some problems back in 2012, and we made a peak of around $18 a bushel. These are the periods then of where stock use ratios were relatively high. 85, 2000, and now recently with the Chinese tariffs. And so all of this economics allows you to have vision and being able to call a market and having some sense of whether you should choose a buy, a sell, or standing on the sidelines. Lastly, we also do some of these things which will help for, there's a big U.S. crop report coming out next week. Every August, it's the first estimate from the fields, from the United States government, that tells you exactly what the crop is going to measure. Every square mile, we send a human being out to survey corn and soybean yields, if you can imagine that. They actually sit in the field, they'll map out so much corn, they'll measure how many beans, they'll count the pods, count the kernels, to get a yield estimate every square mile across the Midwest. Crazy. But in doing that, that report shows us anyway, as we look at here, the August high for November soybean futures versus the August WASDE projected stock use ratios. Right now, where the market is today at around 880, says that number that's expected to come out from USDA is pretty much baked in the cake. In other words, as a trader, I wouldn't see this as very exciting to have a long or short position in because the market seems to be fairly valued. Where if I look at something like corn, here's the black dot that you see on corn, where corn prices are at about $3.60 a bushel. Yet if I look at my stock use ratios in my skew there, I can see that we're about 2 standard deviations below the value of corn. So if you're a trader and you get a market that's 2 standard deviations below value, what should you be doing? Buying. And so these things can help you make better decisions as a trader as you think down the road. And so we really think corn is a much better buy and will be a better buy and has been a better buy heading into this report next week than any of the others. You got a week, the report comes out, I think it's on the 10th, which is a Friday, a week from this Friday. See if the corn market really reacts to that. And as you look at the big story for corn, this is the major exporter stock use ratios, and notice how low we are. So again, I think there's value in knowing markets. I think there's value in doing research. It's another adjunct, if you will, to being a trader or something else. If you're ever looking for an internship, AgResource, as I said, takes those opportunities. I want to thank you for your time, and John, hopefully that gave me a little insight. Thank you very much.